Good morning. This is Kathy Elkins with Premier Marketing. I have on the phone with us today Macy Leonards. She's our internal wholesaler marketer with Assurity Life. Good morning, Macy. How are you doing today?
Hi, Kathy. I'm great. How are you?
I'm doing fabulous. I wanted to work with you a little bit on single premium. We know that this is a very valuable time right now for clients talking about their CD money, their money in their checking accounts or savings account, not knowing what they need to do with it, different options for them. And I know we've talked several times about this, how this is a viable option with you guys and how you can use it for your clients as a different option to talk to them about. So I'm going to
Yes.
let you kind of tell everybody a little bit how to use your single pay, how it works. So I'm going to let you take over from here, okay?
All right. Thanks, Kathy. And you're absolutely right. Single premium whole life right now is huge. So we're going to go through several different things today, including a little bit about the opportunities that you have in the market. We're going to go through the product, some tools to help you sell, and tips for closing the deal. So get ready to take some notes. Use that chat feature for any questions that you might have. But let's go ahead and get down to the details. So really in today's market, it's very uncertain, right? Many Americans are playing it safe with their money because of the pandemic. People don't feel as though they have control over almost anything in their life. And so that's one thing that they're really seeking, control. And a lot of times their money is sitting in savings accounts at the bank or CDs, stuffed under a mattress, quite literally. That's what my grandma does. So whether they're earning zero or practically zero in their interest, wherever they have their money in one of those three options, there is a much better solution. So our single premium whole life can give the clients insurance, so tax-free insurance at death. It can also help them grow their money and give access to their cash value. So let's talk a little bit more about the environment and what we're seeing happening from clients. And Kathy actually brought this to my attention, but it is actually true that since the start of COVID-19, with the pandemic, over $2 trillion have been deposited into U.S. banks. So this tells us two things. Again, clients want a safe place for their money. They want control over it. It also tells us that they've got a little bit of extra spending money. So they're not spending a ton of money on gas going to and from work because a lot of people are working from home. They're not going out to the bars every weekend because those aren't always open, et cetera, et cetera. So we can see a couple trends starting with that. Now, here's another thing to think about. In the 2020 tax year, the average tax refund was about $2,800, which was a 13.24% increase from the previous year. So almost everyone that you know under the age of 65 who is earning more than $12,550 a year would be required to file for taxes each year. Now that obviously creates a very large pool of opportunities for you to have discussions with your clients on what to do with that money. Instead of spending it on a new TV that's going to have to get replaced in the next few years again, or potentially another unnecessary purchase, position it in the way of having the life insurance option that they only have to pay one time into. It's not necessarily taking a lot of extra money to do so. They're just using money that they didn't have or kind of know that they had previously from their tax refund, putting that into a cash accumulating product. And again, having the cash value, the death benefit there, and never having to pay another premium. Now, when we look at the stash on their cash, people often think historically safe alternatives like CDs are a really good place to put their money. So about 7% of households have money in a CD. The problem is CDs, folks, are at an all-time low, very low investment vehicle. CDs, 1 year CDs currently averaging 0.14% interest. That's extremely low and quite frankly unacceptable when they have another option. So with the low interest rate environment, we've got that better solution in a single premium. So let's keep going here. This was really interesting to me. I read an article, and here's a quote for you. So of hundreds of older policies reviewed, easily 90% or more actually were in trouble or soon to be in trouble. Now, this was from John Resnick, who's the co-author of an American Bar Association book on life insurance. So what am I talking about here? In the 1990s, early 2000s, the 80s, universal life contracts were the sensation, right? Everyone said that you needed one. Many people bought one. However, over time, monthly deductions have increased. So that means, along with falling interest rates, policyholders were paying a lot and are paying a lot more premium for a decreasing cash value, a policy that is getting ready to what's called blow up. So there's going to be almost no insurance left or no insurance left for them soon. So what a lot of these older folks are concerned about is they're not as in a great of health as they were back in the day when they first purchased a policy. So they don't feel like they have an alternative to do anything with this money. They feel lost. They want a different solution. But what you can do is a 1035 exchange with an underperforming policy. We see a lot, again, of universal life to transfer that small cash value over. Sometimes it's 5, 10, 25,000 of cash value to a single premium whole life contract with us where they have that safe alternative. They've got a guaranteed death benefit to 121. They've got growing cash value. They've got access to the funds through loans withdrawals or our accelerated death benefit rider. So we've got a couple situations that we've laid out so far. Universal life contracts that are underperforming for 1035 exchanges and tax refunds. So we're going to talk a little bit more about these, but I want to get into some practical tools for you to use, keeping those situations in mind. So here are some questions that you can ask your client. I always recommend, rather than just laying out the facts, just doing the talking, get your client involved in these conversations. Ask questions. From these answers, you'll be able to start to, number one, make the client more comfortable in your conversation, to open up and start trusting you. You'll be able to help them overcome their own objections as they start talking through some of these questions. And you'll also be able to uncover other opportunities or concerns that they might have. So here are 3 questions that might get you started. Number 1, what sort of legacy do you want to leave to your children or grandchildren? Number 2, what plans do you have for your tax refund currently? And what sort of effect will that have on your future earnings? So if they say, well, I'm just going to go buy a new TV, the second part to that, what effect will that have on your future earnings? Well, you're going to have to pay for another one down the road. You're not going to have any money to save for any, let's call it a rainy day. And the last one, do you want to continue paying increasing life insurance premiums? That's a pretty obvious no right there. But what we want to do here is try to expand the answer. So rather than just getting a yes or no from a client, we want to make sure that these questions are formed in the way, or you have a follow-up question that would be formed in the way of having them expand, telling you, a little bit more about their situation, and again, uncovering some trust in some other areas of where they might be feeling pain points. So let's take a look at this single premium product that I keep harping about. This is one of our most popular products with Assurity. It is a true participating single premium whole life. Assurity is a mutual organization. So we've got issue limits or issue ages of 15 days to 85 years. That's a wide range for you. Lots of different client scenarios that you could open up to in this market. And we've got non-med limits all the way up to age 85. You can see for ages 0 to 60, we're going to go up to 700,000 of face amount, no labs exam. And then for 61 to 85 years old, up to 450,000 of face amount, no labs, no exam. So we do ask some health questions on the application. If there are some severe conditions, let's say, we may do a phone interview. We could order an APS. None of that is required up front for these amounts. So now this is, again, a single lump sum payment into the policy, and they don't ever have to pay a premium again. But we do pay dividends if they select that as their option here, rather than paying back in cash. For example, we do pay a dividend to our policyholders each year, which obviously increases the cash value and the death benefit for them. And then obviously an immediate increase in estate value along with continued tax-deferred accumulation of cash value that can be accessed at any time for any purpose. Now, subject to state approval, we've got a chronic illness 101G and a terminal illness rider included that would allow the client to accelerate a portion of the death benefit tax-free if they qualified. Chronic illness, the 101G just stands for the tax code under which this rider is filed. It is the inability to perform 2 of 6 activities of daily living or having a severe cognitive impairment that would qualify the client to be able to utilize this. A couple unique things. It does not require permanency. We do not do any morbidity underwriting on this rider, so it's just automatically included if it's approved at the state by the state. It is available for 15 days, ages 15 days to 75 years in a table 4. So that juvenile range is very, very unheard of in the market. Okay, and then we allow the client to accelerate up to the IRS per diem. The terminal illness is what we consider the doctor telling the client that they have 12 months or less to live. So again, that gives them access to the death benefit early if needed. But what we want to do here is probably where you're going next is, okay, well, how does the policy actually illustrate? What does it look like? So I've got 2 situations for you, one based on a tax refund and one based on a 1035 exchange of an underperforming UL. Let's look at the tax refund situation first. So we're going to say we've got a client, Stacy, she's 45 years old. She's going to be receiving a tax refund of $2,500, $2,538. Now, when you asked her, what do you plan to do with your tax refund? Her initial response was, well, I saw this new chair, this new couch, and I don't know, I thought I kind of liked it, so I'm probably just going to go buy that. You say, okay, Stacy, you could do that, but let me show you a secondary option. This option is going to be if you put an additional $750 in, and we buy the minimum amount of initial death benefit on what's called a single premium whole life policy. Now, the kicker here is it's going to accumulate cash value and death benefit for you. So in the next few years, if you wanted to go purchase maybe an entire new living room set, or if you needed money for a new car, a new dishwasher, a new stove, whatever it is, you've got access to the cash value. Then if something happens to you, you can accelerate a portion of the death benefit if we need to. However, if we're able to leave this policy as is, you're going to have a guaranteed death benefit to pay to your loved ones or your favorite charitable organization upon death. And the best news, Stacy, is that this policy is going to grow year over year with dividends that a surety pays you, even though you're never putting any additional money in. So $750 right now and nothing else moving forward with all of those benefits. How does that sound to you? Typically, a really good way to position that, and the client's going to say, you know, that makes a lot of sense. Hopefully, they'll say that, and they'll be able to move forward. So, taking a look at this illustration on the left, you can see the guaranteed side. On the right is more typically what a client is going to actually see with this type of a policy, the non-guaranteed, so where we're putting those dividends in. So at the end of 20 years, you can see toward the middle of the screen there, where she started off with $10,000 of death benefit. She's now got $10,343, and then she's got $4,700 in cash value. So she surrender value there, what is also considered cash value for us. So you can see that that has doubled over time, a little more than doubled, and she's again just purchasing the minimum here that she could. So the more you put in, obviously, the better. We do also have an option to add a single premium insurance rider that would enhance both the death benefit and the cash value significantly more. This is just showing a plain Jane basic policy for you, okay? So let's go to Earl. He is 70 years old, and Earl has a universal life contract with $5,000 left in his cash value, and he's telling you after he meets with you, maybe you bought some other broker's book of business and you're reviewing current enforced policies. He said, yeah, my premiums keep going up, but my cash value keeps going down. I don't think I'm going to be left with any insurance here at the end of my life. And you say, Earl, I've got a situation for you. I've got just the perfect option. So you say, we're going to 1035 exchange that $5,000 left in the cash value of your universal life. And I think we should do that today or this week, get that paperwork in so that we can make sure that that doesn't continue to decrease. Now, rather than paying over $300 a month in premium each year, you're never going to have to pay another dime into this policy. However, again, it's going to grow in cash value and death benefit for you. So where the initial 1035 of just $5,000 would purchase about $6,400 in initial death benefit for you, at the end of 10 years, when you're 80 years old, you'll have over $7,000 and you can see that moving on down the line there. So again, if you have a need and you need the access to this policy, that is always available for you in the route of loans or withdrawals. So there's two examples of what those different situations might look like. Again, those were plain Jane based policies. We do have that single premium insurance rider, which pays a little bit less commission. So you're aware, but it does really enhance the policy. We've got several tools available for you right now on a SureLink. Now, Kathy and the whole team at Premier is very up to speed with where all of these are as well. They've got great recommendations on what they see from the field working, so feel free to reach out to them too. But we definitely have materials available, hard copy or electronic copy available again for you today. So again, I mentioned that we've got non-med limits as far as the underwriting process goes with this policy. That is truly the case. Again, remember that we are asking some health questions. For right now, the one thing I wanted to mention on this screen, for clients 65 and above, we are requiring that they have a height weight within standard range and then a blood pressure reading within standard range. Those are just temporary COVID restrictions. And then as long as they haven't had or been hospitalized due to COVID in the last several weeks or months, everything should fly through pretty quickly there, but no labs or exam available up to age 85. So one of the things that agents always ask me is, Macy, you've presented this in a great way. I'm excited, but I know that once I get in front of my client, they're the ones with the money, and they will probably have some objections for me. How would you overcome, XYZ objections? So here's a couple of slides that we put together based on what we typically hear agents in the field being concerned about overcoming with their clients. So again, feel free to take notes, take screenshots, but we're going to go through the first one, which is, don't I have a better place to put my money? Maybe an investment account, maybe a long-term savings solution. We'll put it in the stock market. Why is a CD not the best route? Okay, so here's again my suggestion to you. Rather than just answering their question, rather than just answering their question, ask them a question rhetorically. This is going to get them to, a lot of times, help them to overcome their own objections. So here's some questions you can ask to, isn't there a better place to put my money? The first one would be, did you know that a single premium whole life grows value over time? Okay, that's going to get them thinking, okay, yeah, you're right. I only have to pay once and I'm going to have a guaranteed growth. Pretty good. Number two, what are you currently doing with that money? Well, John, that's a great question. Let me ask you this. What are you currently doing with that money? They could say, well, I didn't have the money. It's being refunded to me. I didn't really know that I had it, so I wasn't doing anything with it. Okay, so we've got no plans. Let's put it into this vehicle and make sure we get you a tax-free death benefit and a nice cash value cushion. Number three, do you want to continue paying premiums for life insurance? Okay, well, again, going back to that single premium is a great, great way to spin this. Number four, did you know that single premium whole life allows you to pass on your money tax-free when you die? And number five, what do you need the money for? So again, if they're buying a new TV or something that is probably not necessary, I'll call it. And obviously your clients can do whatever they want to with the money, but your positioning from the agent's perspective needs to be that this is an investment type of vehicle. This is something that's going to grow, be worth it later on. And so it's more of a delayed gratification, I'll call it. Adult responsibility decision, we'll call it. All right, so here's another common objection that agents think that they'll have. I don't want to go through the hassle of blood tests and underwriting. A CD is easier, okay? It might not be easier. You don't even have to meet with me in person to do this application. We can get electronic signatures. I'll do the paperwork for you. We'll get this sent in and we'll get you an approval, okay? So if we're doing a 1035 exchange, we just need some documents from your current company. And then if it's any other form of payment, I'll say we just need a check written out to a surety to be deposited. That's that, and we'll move forward. So very easy process. Again, we heard about the no labs, no exam, available up to age 85. Is the ease of a CD worth the low returns? Okay, so there's one question you can ask them. You could go put it in a CD, but is it really worth the 5 minutes you might save because of the low returns? Number 2, did you know you may not need to have tests done? We covered that. Number 3, did you know that you'll know your policy status after just 3 days? And I will, folks, say that we have got a phenomenal client portal. It is myassurity.com, myassurity.com. Once a policy has been approved and has a policy number, once the policy has been approved and activated, the client does have access to go register for a MyAssurity account. Where they will constantly be able to help self-service. So they're not going to have to call you to change beneficiaries, to check the cash value and death benefit of their policy, take loans and withdrawals, things like that. So they always do have access to that as well with us. And then lastly, are the benefits of single premium whole life worth a few extra steps? Again, play into the death benefit side of things. If you're leaving this to your loved ones, you're never going to have to pay a premium again. While we may have to answer a few health questions where you wouldn't have to with the CD, you're never going to have to write another check. You're never going to have to, XYZ. And then let's talk about this objection. I've had my current policy for years. Clients get comfortable, right? That doesn't mean, though, that it's the best option. So questions to ask them. Does your current policy grow cash value? Single premium whole life, and especially ours being participating, is very rare. So growing cash value without having to put additional premiums in is a great way to position that. Another question you could ask is, do you want to pay premiums for the rest of your life? What would your current policy leave to your loved ones? And does your current policy include provisions for living benefits? If something happens to you and you need access to that death benefit or cash value, can you get that right now? And how easily? Is it as easy as going into your portal, requesting the money, and being transferred it over in a few days? Or are you going to have to go through a hassle? So again, attach value to this sale, folks. Help them understand that single premium whole life offers them more than money. Again, clients in today's environment feel like they have no control. They feel that their options are limited. They really want safety and they want control. So make sure you're using those key phrases when you're talking to them to help them understand that that's what they get with this sort of product. And then to tie it all together, tell a story. You've probably heard that over and over, but it really is what we see some of our top producers doing, is rather than, facts are good, but rather than just all facts, telling a story, making it so your client can understand that it could happen to them, it can happen to anyone, and they need to be protected. Stories often resonate a little bit better in that regard. So statistics, again, I'll say sparingly statistics would be good to use. Emphasize the need. Let them know that single premium can help maintain their savings and guarantee that their heirs will receive what's left to them. Make it personal. If you have a story, or if you know your client well enough and they have a story that you feel comfortable and professional bringing up in a professional setting, you could always tie it together there. And lastly, be confident. When you're working with a surety, you are working with a carrier that puts the people and planet first. We're a mutual organization. We're a certified B corporation. If you haven't heard that term before, highly recommend you Google certified B, just the letter B, corporation, and what that means. We are committed to using our business as a force for good in the world, which does a lot of times resonate with consumers today. So with that, we are going to go ahead and wrap things up today. If there are any questions, please note those in the chat feature. Kathy, will Premier be following up with answers to any questions noted in the chat feature today? Is that the process?
Yes, we'll be reaching out to everybody. So if you have time, just go ahead and put your questions in the chat box there. Otherwise, if you have other questions, you can reach us at 800-365-8208. Extension 607 is our team extension. Macy, you did a really good job. I was trying to write down a whole bunch of information here. We will get this out. We are recording this, So we will get this out to everybody that registered and that was online today to make sure you can jot down those questions to talk to your clients about, because those are really good information ideas there as far as what to ask, what to talk about, and how to get the conversation started. So Macy, you did a really good job. Thank you. Appreciate that.
Thanks, Kathy. Thank you.
Yep. Yep. We do have time. We have one question that did pop up, and then we do have time for this question real quick here. Is there a surrender charge associated with this policy?
That's a good question. Typically, no. If you're going to, I'll say if the client is going to be taking if they're surrendering the policy, no, there's no surrender charge. Withdrawals and loans, there's loans, there would be an interest rate that they would pay back, but it's close to 2.9% right now, switching over just slightly higher than that in the month of March, but even that is pretty low.
Okay, it looks like that's it for questions so far. So if you have any additional ones, please go ahead and sign in, get the information there for us, and then or reach out and give us a call. We'll touch base with you too. If we're unavailable, just leave a message so we can get back to you right away. But Macy, you did a wonderful job as always.
Thank you, everyone, for your time, and Kathy, thanks for the opportunity.
Appreciate it. Thanks a lot. Take care, everybody. Have a great day. Until next time. Bye.